let's get started here. Hopefully, you guys will get a lot of knowledge out of this because I try to do the best I could to explain um, options and swing management and how you can let some of the runners go up to 100 to all the way up to even 400%, 500%. And if you have a really small account, how to manage those swings properly with those really, really small accounts and how to properly take profit and when to take profit and when you should, think about taking profit because it varies, right? This is going to be a very, very good one because I tried to cover everything. Let me know if you guys, um, if I missed anything, before the end of the webinar. But um, really quickly to just go into it, start of it, always you want to keep your consistent sizing, right? Uh i try to keep the consistent money that I put into each trade. So for instance, if I put in about 10 to 15k into each trade, I try to keep it similar around 13 to 15k average into each trade. So I think that is very important. Why? Well, because that gives us a flat line where we can, then judge some of our plays off of, and then we can journal and then come back the next time and have a better understanding of, okay, what do I need to improve? And what happens if I improve this little thing? What happens if I improve this little thing? So the key is always, right? You don't know which plays are going to be green, which plays are going to be red. Imagine you took 10K size on all three of these plays and you made, 100, 130%. And then you took a 200% play, 20K play, and you basically lost 20K, 20K, 60K, and now you've basically given back all of your wins, right? So you don't know which plays are going to be green, which plays are going to be red. So always try to keep the same contract size or the same size with the money that you put into each trade. Contract size really doesn't work because none of these options are linear. Like none of these options have the same pricing. So you would have to kind of do the money method uh, on through it. But how we day trade is we day trade with the same amount of contracts throughout the week because we expect a certain move every day, right? So in the swings, you always want to put the certain amount of money into each trade, and you want to treat each, kind of a batch of a swing as a group, right? Because by end of the week, even if you're up, a 100% on the count, I promise you that is unthinkable, right? Even if you're up 20% on the count, it's unimaginable, right? It's just over time, you will get better. Imagine doing this for 10 years and getting really good at it and then making shit ton of money. That's the key, right? So let's go into the lesson here. Uh, Example, every week, options die, right? Half the options that you see at all times will go to zero. Any option that is out of the money will go to zero, right? So half the options about what you see almost every week will go to zero by end of the week. So what does that mean? That means that Monday option prices are much more expensive. Friday, they're much less expensive, right? So from Monday, option prices, for example, on Tesla, when Tesla was around $300, it was Monday, they were about $7. Tuesday, they were six. And then Wednesday, it was $4.50. Thursday, they were about $3. And, Friday, they were about $1.80. This makes sense because, there is it's called time value that's built into each option. And that's why it's a bet, right? That's why it's not just another stock. Uh, it's there. It's something that affects these options really heavily. So swings, the more the option that's out of the money, the less likely it will ever be in the money, and it will keep even, so for instance, if almost $5 out of this option is time value, right? And there's only a chance that by Friday, if this option is at the money or in the money slightly, you will keep $1.80 out of it. What does that mean? That means almost a lot of these options downtrend. So what you need to do is on that downtrend, all you have to do is catch a bottom, quickly long it, and get out, and then take your money, come back the next week, next day, and then sometimes, right, with these options, what happens is when you catch a really good trend, right, uh, options tend to hold the value because once they get in the money, right, as the stock goes in your direction, the delta goes up, right? So the delta kind of overtakes the time depreciation, which then gives you basically an even kind of a move, and maybe even, sometimes a better movement, because the delta just keeps going up. And if the stock, let's say, moves $10 and the time depreciation is only $2, and your delta increased by, let's say, 30 cents, and this is a little bit more on the advanced side. And this is something that we can even save for later, right? We don't have to get too much into this because this is going to be a simple explanation. So um, that's okay. We don't need to go too much deeper into it. Just understand that Monday options start off very expensive. Friday, they end up very cheap, right? Because they have time value that's built in. So you need to really understand this part of options. And so going into it, to give you guys an example, look, this same move on Tesla from 269 all the way up to 274, which is about a 5 point move, right? This 5 point move, right, with the same delta of 50 cents, right, with a 50-cent delta on each options, on Monday, your option price would be what? Right? Excuse me 1 second. Okay, we're here. So 1 second here. Let me extend this. Okay, so your option price would be $7 with the same equivalent move on Monday, right? On Tuesday, your option price would be on the same equivalent move, $6. On Wednesday, for the same equivalent move of $5, your option would be $4.50, right? And it'd be $3 on Thursday and Friday, right? And this is just the same slide here, but just as an example of what Tesla's options look like. And now you have to understand, on this equivalent of a move with a 50-cent delta, that means every dollar the stock goes up, the option moves uh, $1. So that means for a $5 move on a stock, the option is going to move $2.50, right? So on a Monday, right, the percentage of $7 is what? Right? There was a, there we go, right? Is 35%. So this move would pay you about 35%, right? On Tuesday, this exact move would pay you about 41%. And on Wednesday, the same exact move will pay you 55%. And now this is where things get interesting. On Thursday, can anybody tell me what type of percentage do you think you can get out of this on the same move?
200.
Yeah, yeah. Because I mean, the math right there, but almost 80%, right? And I'll show you an example of why this is, right? And then by Friday, it goes up to about 140%. So a little bit off there, just a little bit off. But it's just the price of the option, right? Compared to the move that you get. So if you make $2.50 on a $1.80 option, you get about 140% return, right? So throughout the week, what you can do is, right, if you want Friday as the best day to understand, okay, because this is the biggest day, right? This is the day where you get the biggest percentage. So you should always look down from this day, right? From this is the day where you should always, right, look at as the top day, right? So on a Friday, if you were to get, let's say, a 200% move, right, you would only need the option to move, about $3.60, right? Which is not that much. That is about a $6 move on stock, right? And sometimes on a Monday, when you get a $6 move on a stock, you only get about 90%, right? So when you're trading options and when you're in a play and you see something that's up at 100%, what you should do is go back and be like, okay, what day is it? Is it Tuesday, Wednesday? What day is it? Oh, it's Monday. Okay. Well, now what I'm going to do is I'm going to, you know, take this, right? Whatever percentage I have, you're going to take this screenshot of this, take a screenshot of this, and this is your cheat sheet, right? Whichever day it is, you're going to times it by this, right? So on Monday, if you have 100% and you times it by 4, it's going to be 400%. That means that on a Friday, this same option would have paid you 400%, right? Should you take profit at 400%? Why not? Right? Should you take profit at, if the option on Monday is at 70%? Why should you not take profit on a Monday when the option is only up 70%, but on a Friday, the same option would be up because you got the same move, right? You got the same type of a move. You got the same movement in the stock. It doesn't mean Friday, the stock doesn't change magically and moves 15 more points. It doesn't. Every stock is going to have a same average true range that it has for the past year, past month, past couple of years, right? It will have the same average true range, meaning the stock will always move as much as it's going to move, but it's your options that are changing. So what you can do is, okay, on a Monday, if you see a 70%, okay, well, 7 times 4 is 280%, right? 70% times 4 is 280%. Should I take profit at 280%? I'd be crazy if I didn't. Let me lock some in. Okay, Tuesday, 3.4, right? It's the same theory. Any day when you feel like, okay, should you take profit? Should you not take profit? Always do this math. Times it by 4, times it by 3.5 on Tuesday, times it by 2.5 on your percentage, right? To get the perfect percentage that you technically are up. Remember, we cannot make this linear because the stock market isn't linear. Unless we're trading shares and we put in the same amount of shares into each ticker. So for instance, if we're putting in the same amount of money and each ticker was at $80 and they all went from 80 to 85, then it would be linear. Then what we can do is we can put in the same amount of money, same amount of shares, and get the same move on everything, and it would be perfectly, in sync, right? So when you see those 400, 500% movers from a Thursday and a Friday, technically they're only 100% move on a Tuesday, on a almost 100 to maybe 120, 130. How many moves we had Tuesday and Wednesday that were 100, 200%, which we felt like it wasn't as good. Even I caught myself doing that this week because of last week, right? And you shouldn't do that. You should definitely look at this as a cheat sheet and play with this, right? So take a screenshot of this and always, right, refer back to this, right? Okay, what kind of profit I'm in, what kind of percentage I'm up, right? Is this a crazy enough percentage? Is 300% a crazy percentage? And remember, it's the same way, right? Because we buy some of the cheaper options, out of the money options. Yes, on a Monday, they're going to die faster as well. They're still going to die pretty fast, but on a Monday, they're going to die a little bit slower, actually. So they're not going to die as fast either. And we're going to talk a little bit about that as well. Um, but there's two types of approaches to swing trading, right? One is active and there's the inactive. Active simply means that you are very active at trading, right? You are taking 100% moves, 70% moves, 60% moves, and you're stopping out on maybe 50%, 30% on however, whenever you feel like you want to exit, right? It's more so on the active approaches when, you can manage your own risk management, right? Inactive is
Good morning.
hey, good morning. Was that KK?
Yes.
Good morning, KK. The inactive approach is very much so you're sitting back, you're laid back. Okay, you let your option either go to, on a Monday, something like maybe up 100%. Okay, take a stop loss at 30%, right? You have all of these little, steps figured out that you need to manage for your account because, we're going to go over that. But, maybe you let your losses go to 100%. Okay, 100% loss, that's fine. If on a Friday, I make 500%, 300%, it all totals out, right? If you do the math, right, doesn't matter if it's Monday, Tuesday, Wednesday, if you have a 70% winning strategy, yes, there's going to be certain weeks where uh you could have taken 100% on a Monday, which is almost a 500% on or 400% on a Friday. But the key here is our strategy in the long term wins, right? And for instance, on a Monday when you don't take that 100%, yeah, you might feel shitty that now that option is dead at 100%. But on a Friday, when you do get that 100%, it will make up for the Mondays, the past 5 Mondays, if that makes sense, right? So, but the first thing before anything, this is what you need to do. You need to turn on Discord notifications. Discord doesn't do that automatically. You need to click on the data driven trading uh, chat page, right? The main page at the top, and go to notifications, click on all messages, and lastly, turn on mobile push notifications. And another thing that you have to do in order for Discord to send you good notifications is have the app active in the background, right? Then and then only it will work, right? Also, it will not work. It will send you a notification whenever you get back on the app, right? And sometimes even then it glitches. So remember, or just make sure to check Discord, once in a while, every 10 to 15 to an hour, right? Whenever, time allows you to just really quickly hop in. Okay, check Discord. What's going on? Okay, do I see anything? Okay, that's fine. Because sometimes the analysts or me or sometimes we see stuff that you guys don't see because you guys haven't watched the charts as long as I have or the analyst has. So it makes you, sometimes we see something that means that okay, now something's going to sell off. Okay, take profit, right? Even when the Roku signal, we tell you guys, okay, we're taking 50% off. I'm taking I'm taking full profit here because, well, it's not going to go, right? And those are the things that you want to be in tune with, because in options, in a couple of seconds, these option prices can go from $4 to $2 to $1. So you want to really be on top of that, right? So let's go over really quickly on how you would treat this active approach and the trading with maybe 1 to 2 contract, right? Because I know a lot of you guys have some small account sizes and you guys only trade about 1 contract, right? How do you manage this 1 contract properly, right? Because I have a bigger account, right? I have about, sometimes I buy over 100 contracts, right? 200 contracts, and I can let go of maybe 100 contracts here, then 50, then 25, and then 25. You guys can't do that, right? So somebody that has 1 contract, what you would do is you would put your maybe stop loss on the active side of 50% and profit target anything above 100%, so that let's say um you take a trade on a Monday and the profit hits 90%. Yes, according to Friday, you should go back to the cheat sheet. You should take profit at 90% on a Monday, right? Or a Tuesday or whatever, the cheat sheet tells you, right? It's above 100% according to this cheat sheet, right? Um, you should take profit above 100%. But even if you don't, that's fine, because remember, on a Friday, if you catch one play that pays you, let's say 500%, right? It'll make you much more than stopping out. But the whole system for the active approach is that you keep everything tight, right? So that is more so for the inactive. And we're going to go over what I just explained in the inactive version. But in the active side, you put your hard stop at 50%, you put your profit target at 100% or very slightly above 100%, right? So you're basically looking to lose about maybe 50 to $70. If the stop loss gets below and goes to 70%, that's fine. Okay, it happens, it squeezes down. Sometimes you're going to stop out on a Monday when it's 30%. So it's going to even out in the long run, right? And the same thing when you hit over $100 to $200, right? You take your profit because sometimes, you're gone. 5 minutes later, you come back, you see a 200% gain, and you're like, okay, dude, I'm up $200. Okay. See, you would have to lose two trades to basically take away one of these good trades. And our strategy, if you go look at it, is pretty good. It's nearly 70% from all the results that we get, right? And don't quote me on that, but you guys can go check it out. It's actually more than that. It's actually 80%, but that means 8 out of 10 trades are pretty much green a lot of times. And with that, guess what? You don't have to be, even all you need to break even is, have maybe a 30% winning strategy. But now when you have a 80%, you'll do really good. But you just have to manage the risk properly, right? And then if you have two contracts, set two targets, right? Same thing with the stop loss, 50%, because you're trying to actively manage it. 50 to $70 of a loss, anything above 100, you're going to target first target, first contract, always take it off at 100%. Second contract, you can take it off at 300%, 200%, 150%, doesn't matter, right? On a Friday, sometimes you'll see a quick move on a stock where it won't even let you get out until you see a 500%. So you'll see 500, right? So that's what I mean, right? So you could take it off at 100, 200, wherever. And uh, always, right? This is the most important thing, right? Always move your stop to break even, right? If you don't like losing, okay, and you see a 70% on a Monday, 50% on a Monday, and you go back to this cheat sheet and you see that, okay, well, the stock is up over 100% according to Friday. I'm not going to still take profit because I want 200, 300%. Well, do me one favor at least. Put your stop at break even. Why would you let 100% up trade go to negative? Why? Right? And same thing with when your stop is, above 100%. So meaning if the option is at 100%, 200%, or 300%, and now you have, let's say, 10 contracts, right? You're playing with this approach here where you have multiple profit targets, and let's say you take off 10 contracts here and now you have 10 contracts left that you want to take off at 300. Put the stop for these 10 contracts at maybe 100 or 50% so that you don't lose the full amount. Why would you let your contracts go to zero? And these are some of the things that are very self-explanatory, and I always get DMs from individuals that don't understand it, which is fine. And that's why we're going over it. Don't let these small little things of, okay, maybe, yeah, maybe you won't get 500%, but who cares? Nobody ever went broke taking profit. And that is a very big saying in the stock market. And somebody quoted that in the Discord like 2 days ago. And believe me, we've been saying that for 8+ years, and it's been going on for even, probably hundreds of years. Nobody ever actually went broke taking profit. So always take profit, right? And put your stops at break even or at a profit target where you'll always be green on that particular trade, right? So you don't ever look back and you're like, oh shit, dude, I freaking messed that trade up. Went from 100% down to me losing 100%. How crazy is that? We're trying to hit a 2-to-1 risk to reward, right? And sometimes we're trying to hit, 5-to-1 risk to reward. But you know, if the stock is up over 100%, we're not putting our stop at break even. Why? It just doesn't make sense. You always need to do that. Okay. And this is the inactive one. So we're going to have to rush here just a little bit because we're going to do pre-market. But same thing, one contract with the inactive approach. What you can do is let your stop losses run. Okay. Let it go to zero. Whatever money you put into the contract is going to go to zero. That's fine. Right. And the profit target for the inactive system is going to be similarly to about 200% and anything above. Okay, taking profit below 200% when alerted. And mind you, okay, this 200% is not linear. And I keep on saying that. And I hope you guys get that in that picture in the back of your head. It's never going to be linear because remember, Monday, 35% is 100%, right? On Friday, this 35% from a Monday would be 140%. This is what I mean. Come back to this cheat sheet. On a Monday, if you're okay, so you're looking at your phone and you see you are up over 50%. Okay, you're up 50%, but it's a Monday. Come back to this cheat sheet. Times four. Well, I am up over 200%. Should I be taking profit? I'm doing the inactive system, 200% to 300%. Let me close some of my profit. Good. Okay. You made $200, right? You could have lost 100, but you made 200. Perfect. 2 to 1 risk reward, 70%. Anything above a 50% winning strategy, you'll make money. Simple. It's literally simple math. And it's the same thing with the two contracts. Now you have two profit target, right? First target, you take one contract off at 100%. Second contract, you can take it off at 300%. And remember, not linear. 300% means 70% on a Monday, right? 300% means almost 80% on a Tuesday. Okay. If I made a cheat sheet of like 20 different, like percentages here, I feel like it would confuse you more. I think this would be much easier that you guys can go back to and just put it into your phone and be like, okay, is this worth it? Right? So follow these systems, build the system for yourself. You don't even have to follow the one that I'm showing you here. This is something similar to what I follow, right? But follow the system that you're going to build for yourself. Some of you guys might be trading 5 contracts. Some of you guys might be trading 500 contracts. I don't know, right? I cannot sit there with you guys and tell you guys to risk manage, control, and do all of these things, right? Because, well, there's hundreds of you guys. So, what I want you guys to do is properly understand what you're trading and what's your execution of plan, right? Like what you're supposed to do when shit goes south, right? Don't always just rely on us, guys. Remember, I've been trading for so long. I lose, let's say for instance, I lose 100K tomorrow. It wouldn't mean shit to me. Guess what? That would be just a bad week for me. Next week, I'll fund my account again. I'll make money, right? Some of you guys can't afford to do that. So why do that? You cannot compare yourself to somebody that put 8, 9, 10 years of their life into trading and try to get the same results. So this is why when you guys ask me for answers, all I can do is I can point you guys to in the right direction. But remember, it's very different, right? You're like, well, you were saying this in the chat. Well, that wasn't for you. It was for somebody that was trading 100 contracts. For one contract, lock it in at 200%. Do you guys see what I mean? Like it's so much, like trading is so complicated that people tend to confuse it for it being very simple when it really is very simple if you build a system. If you build your system and you do that system every week, it's literally going to be just something that you're doing in the background. You open up your phone, well, it's a Monday, 70%, lock it in. That's 150%, 200% for a Friday, dude. 200% gain in just 30 minutes. All right, I'm taking it, walking away, running with it. Amazing. Like it's just going to be a second hand, but you have to build the system. You cannot repeat something. You cannot have a morning routine if you don't have a morning routine, right? You cannot really follow and do the same thing over and over again if you don't know what you're doing every day. So build that system for yourself, right? Build a plan, eliminate emotion. That's the key to winning in the stock market because remember, When you get excited, you're really happy. When you get, when the stock starts going against you, you get sad. And then you go really happy again. And then, like these emotions make you do stuff that you don't want to do, right? On a Monday, you see a 300%, which is on a Friday would be equivalent of almost a, a 1200% move. Okay. Why would you not take profit? Why? Because, well, when it was going up, it makes you happy. When it comes down, it makes you sad. And now you're happy again. Now you don't know what to do because your judgment's clouded. But if you have a plan set, well, I'm gonna do this. I'm gonna follow this plan, right? And okay, then you were gonna exit. That's it. You make money, done, right? It's a business. Treat it like a business. Okay, really quickly to go over some rules here, right? Always move your stop to break even after taking profit at any point. Any type of profit you take at 100%, 70%, 50%, doesn't matter. Move your stop to break even. If that's your system, build your system. I'm not telling you what to do. I'm just telling you what I would do as somebody that is an experienced trader, because what's the point of ever going from 10K up to being now down 10K? What's the point? Nothing. If I'm up 10K and it goes down to zero, well, I was already risking 10K to start off with. Now I'm risking basically house's money, but I'm also still risking 10K. That's not house's money. That is your money that you're risking already. Put your stop at break even. Okay, you lost that 10K because you were aiming for a 50K day, 60K day. That's perfectly fine with me. But why are you risking now 20K to make 50, 60K, right? So you need to understand to how to lock in those profits, right? Keep the small gains. Always move your stop to 100% or 50% if the option is above 100%. If the option gets above 100%, I would say even like maybe 150%, move your stop to 100% or 50%, right? So for instance, if the option is at 100%, move your stop to 50%, right? Keep those gains. Why are you giving those gains back? It's okay. If the option usually goes back because we're trading out of the money options, they will most likely go to zero and you will lose the whatever money you have left in the option. So what's the point? Why not just take profit, right? Very rarely it will go back up, but that's fine. On those days, you can re-enter. If you don't like losing, don't ever let it go from green to red, just like we talked about. Always put your stop at break even or higher. And don't ever FOMO into a play. You miss a play, that's fine, man. It's okay. The next play, you'll get a better one. It's fine, right? Remember, it's all about the 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 strategy being a green strategy, right? Over time, it's gonna work out, right? It's fine. If you miss a play, that's fine. And there's always the next day. And never add into a play unless if you're a beginner. I mean, if you're a beginner, never add into a play. If you're a little bit more advanced and you know what you're doing, you can always add into your play, right? For instance, if the option started off with $5 and now it's $1, yes, you can add into that $1 option only if you know it's going up. But if you're adding into a dead option that you know it's not going to go up, you're basically wasting money, which that money you could add into another option like a Roku option, which you could get a 500% return in, which you can make the money back from. So why waste that money, right? Come up with a plan that you're going to follow that's perfect for you. I just explained to you guys how to do that, right? I just explained that to you guys how to make this like a personal plan, because my plans are going to always be different. I cannot make the same plan for every single one of you guys because you guys have different account sizes, different risk managements, different type of traders, right? You guys are all different. Everybody's unique, right? We cannot fit all of you guys into the same picture because we are all unique. We're each and every single one of us is different. So that's fine. But let me go over some questions here really quickly. I tend to get out of the winners quickly, but recently I've been moving my stop loss to break even and putting an alert and leaving the chat chart. And now um, I'm not break even trader, but I end up with barrel, the week should have like it or keep tweak. I think what you need to do is, Mohammed, you need to understand what strategy you're trading, because if you're trading the swing strategy, then I would go with something like I explained, right? Right. These things right here, right? What system are you choosing? The active trading system or the inactive one, right? Are you more, passive or more active side, right? And then I would come up with a plan of what you're going to do if the stop loss hits, what you're going to do if the profit target hits, what you're going to do when the first target hits, what you're going to do when the second target hits, and where is the first target, the second target. See, there's so many questions that need to be answered in a plan, in a system, and each one of these are different systems, right? And of course, with all of these, you have to, okay, what are you going to do if you're up over 100%? Put your stop at break even. Like, you need to build the plan unique to yourself, right? And 30% stop on swings too tight. 30% stop loss is very, very tight on swings. Why? Well, because these options are super cheap and they usually die. But, on a Monday, I think even Monday, 50% should be good. Why? Well, because remember, not every Monday you're going to lose, right? There are going to be Mondays where you're going to get 100%. There's going to be Mondays where you're going to get 800%. There's going to be Mondays where you're going to get 500%. So that's okay. Even if you put a stop loss at 50%, it's not going to hurt you. I think 50% is good. I think Thurman said the right thing. I think that is term, if I'm not mistaken, right? 50% is more reasonable. How far out of the money do I buy? I buy anywhere from 2 to 3 out of the money, or maybe one out of the money, or two out of the money. And that really depends on what kind of stock I'm trading, what kind of ticker I'm trading, what's the price of the options, right? I don't want to buy $15 options, right? Because it's just not going to do me no good, right? I'd rather buy $5 option, $2 option, $3 option, ride them up to $20. All right, guys. So we're gonna jump over to pre-market. Hopefully, you guys learned something. If you guys did learn something, let me know in the chat room. And hopefully, this kind of made sense and you guys understand that trading is not linear. Everybody has their own strategy that you need to follow, and it is unique to every single person. And remember, it's unique to every single day. Why? Well, because options are dying over the days, and you need to account for that, right? And percentage returns are only as good as you understanding what those percents mean in real, right? Basing it off of an actual number, that is kind of a linear number, which would be like Friday's numbers, and then you try to make it linear by dividing it through the week. So that is all I have. So good luck. This will be posted in the pre-market plus section for you guys to go back and watch. And hopefully this will help you guys build your own plan. And if this helps, let me know. We'll do more of these lessons, right? We'll help you guys more. We'll do more of these webinars where we get deeper into trading, and hopefully you guys understand more about trading and you guys learn more, right? And hopefully even make more money. But that is all I have. Good luck. See you guys in chat.